team members here to give you this incredible presentation on how to successfully navigate your business during the hashtag COVID-19 era. And here we're going to be giving you a little bit of a quick, housekeeping on Zoom. So I'm going to have Sophia take it away and give you the tips and tricks on how to navigate Zoom while we're on this presentation.
Well, hi everyone. Good morning. My name is Sophia. Just so everyone knows, throughout this presentation, we'll be answering questions and at the end as well. So to do so, if you go to the bottom of your Zoom screen, there's a toolbar. You can click the chat button and you'll be able to either raise your hand or chat publicly, or you can direct them to me if you don't want your name to be shown to ask questions. And I think myself and Mr. Michael Daskell will be asking questions throughout to Miss Terry. And then also this whole presentation will be recorded. So everyone at the end will receive an email with the recorded link to everything you're seeing here today. Thank you.
Thank you, Sophia. And to introduce our speaker today, we have Mr. Michael Daskell himself. He's the managing partner of Daskell Bolton and our very own Boca Chamber chairman of the board. Michael?
All right. Thank you and good morning, everyone. Hope everybody is enjoying the quarantine, being with their families, and everyone's safe and sound and healthy. As Chastity said, I'm the incoming chair of the current chair of the Boca Chamber. And Terry and I are partners in a CPA firm called Daskell Bolton. So we basically have, I think, a short and sweet presentation. And the idea today is to give everybody ideas how to immediately get money from either the state of Florida or from a disaster loan from the SBA or from the Paycheck protection program that the SBA has. And then furthermore, Terry is going to give everyone some ideas on how they can take advantage of some recent tax law changes. So for certain types of businesses, you may be eligible for immediate cash by filing amended tax returns. There's opportunities for this year. There's carryback losses. There's all kinds of stuff. And Terry Kay is on the executive committee, so she and I manage the firm together along with two other partners. She's also the tax practice leader for the whole firm. She is the partner in charge of our Sunrise office, and so she basically covers Dade and Broward County and has clients in Palm Beach County. And she's a brilliant lady, so she's going to give us some great ideas. So there's the intro.
Thank you very much. So as you said, I hope everybody is staying well. And I know that this is a little bit of a difficult time. We've been spending, nonstop really helping our clients walk through the processes that I'm going to explain now and are in our PowerPoint. So I don't know if Sophia, are you the one that's clicking the slide? So thank you. Next. So first of all, what I want to say, everything that we are presenting today is based on the most recent guidance that has been issued. Laws were passed, and now all of the different agencies involved have time to go ahead and get guidance out there. So the SBA needs to issue guidance, the IRS needs to issue guidance, Department of Treasury, Department of Labor. So we have the most current information, and in 5 minutes after we're done, something new can get released. So next slide. So the first thing is, state of Florida has a disaster bridge loan. It is a short-term 1-year loan. There are no payments required, no principal, no interest for the first 12 months. Maximum amount is $50,000. They say that there's up to $100,000 in unusual cases. I haven't found anything that defines what takes you from $50,000 to $100,000. And this is identifying the sources that you would have to repay the loan, whether it's going to be from operating income later in the year, from another loan, or from other sources. But for the first 12 months, 0 interest. And then if you don't repay it at the end of the 12th month, then you have 12% interest accruing. And we have the link for where you can apply for that below. The application process for this is very voluminous. It requires a ton of paperwork, prior tax returns, and other attachments. So while these funds are available, this is probably not the best use of your time and energy of the various programs that are available. But if you need up to $50,000 and have the time to do the work to put this loan application in, go ahead and do that. Next slide. So the SBA has always had an economic injury disaster loan. That loan is what's called a 7B loan, and it was designed originally for physical damages, hurricanes, tornadoes, floods, things like that. And so a lot of businesses may be familiar with that from those rules. What they did is they amended some of the rules for that, and they updated it for the current coronavirus situation. That application is directly with the SBA. You go on their website, and I have the link in the PowerPoint. You go on their website, you download the application. It is also voluminous, the amount of data that they're requesting, but you can get a loan of up to $2 million. The term is up to 30 years for repayment, and it's at a fixed 3.75% interest. You can use this money to pay your fixed debts, your payroll, your accounts payable, any other bills that you have that you need to pay. And it is intended to replace lost revenue or lost rent if you have rental income. It's not supposed to be used for expansion. And generally, if it's over $25,000, they're going to want some collateral from the business and a personal guarantee. They may have upped that to if it's over $200,000. There's been conflicting information. This loan is administered directly through the SBA, not through the bank. We're not sure how long that is going to take, but because this is so much longer term and so much more money potentially, that's why if you're putting your energy someplace, do this loan application before you do the Florida Economic Emergency Loan, because the amount of data you have to submit is actually more for the $50,000 loan than for this one. Next slide. The SBA also has an emergency cash grant of $10,000. It is a very simple 2-page application. You check a box that says, yes, you want to be considered for the grant, and then you fill in your bank information. So this everybody should be doing for their business. It's a very little bit of information that they ask, what the revenues were for last year, what the expenses were for last year. Very quick and easy. It's actually a grant, so you don't owe the money back. And this can provide a much needed cash infusion. They say that they will let you know within 3 days. I have clients that have already submitted for this more than 3 days ago, and they have not heard anything. So I think that it's so backlogged at this point that they really are not adhering to the 3 days. But again, this one is simple, easy. Every business can go ahead and do it. And Michael, are there any items on the chat so far? Anybody have any questions so far?
No, I'm monitoring it.
Okay, perfect. Next slide, please. So the Paycheck Protection Program is the one that everybody is hearing all about, and this one is fabulous. And we highly recommend putting the application in for this. This is created specifically for the current pandemic, and it's an SBA loan also, and it's called a 7A loan as opposed to the one we just talked about that was a 7B loan. The difference is, well, there's a lot of differences. The biggest difference is this you apply for directly at your bank, not at the SBA. So the SBA is going to guarantee that the banks are going to get repaid on this loan program. And so you're working with your banker, your business banker, putting in the application, filling out computations, which I'm going to go through in just a moment. The bank is going to fund the loan once it gets approved, and then the SBA is guaranteeing it. You have 2 years to repay if it hasn't been forgiven, which we'll get to in a moment, and the interest rate is only 0.5%. There's no collateral required. There's no personal guarantee required. The application can be put in starting tomorrow, and the loan amount is up to $10 million. So even with the loan, if you do not get it forgiven, then you have no payments and no interest for the first 6 months. Interest will accrue during that period, but again, it's at 0.5% for the year, per year. So it's really a very, very inexpensive loan, even if it's not forgiven. Now, this is designed for companies that they're calling small businesses, fewer than 500 employees. There are certain industries that, primarily hospitality, but there are certain, and franchisees, that you don't have to limit it's 500 per person. They actually will allow you to look at 500 per location. So this program, every business that has any payroll at all, and this also applies to self-employed individuals. Every business should be looking at this. Next slide, please. So this program is designed specifically to fund payroll for an 8-week period. The allowed uses of the proceeds are your payroll, so the actual payroll plus all your benefits, your payroll taxes, everything related to that, paying your independent contractors, you can pay interest on mortgage obligations, you can pay your rent, and you can pay your utilities. And it's a loan that's designed to be 2.5 times a computation, and then over the next 8 weeks, you use it for the allowed purposes. Payroll includes salaries, wages, commissions, and tips. It includes the employee benefits like vacation pay, parental and family and medical sick leave, allowance for terminations if there are any, payments that are for the group health plans, including the insurance premiums and any retirement benefits. And again, independent contractors also are included in this. Next slide. So we actually developed an Excel model, and we're happy if you email us or email to Chastity or Sophia, they can then forward it over to us. We're happy to send you out the model that we created, because the computation, while it sounds simple, has several different places where there's caps involved. And so we modeled it out to make sure that we knew how to best advise our clients, and we're happy to share that with members of the Boca Chamber. But basically, you're calculating your average monthly payroll that is either a last couple of months if you're a new business, it's all of 2019 divided by 12 because it's monthly, or it's the trailing 12 months. So it can be from April 1st of last year through March 31. Different banks are interpreting the average monthly payroll differently. So we see some banks that are asking for the information based on all of 2019, and we see other banks that are asking for the trailing 12 months. But either way, you're getting to this average monthly payroll, and then the loan amount is 2.5 times that. And if you have already applied for the other SBA loan, the 7B program, you can include the amount from the 7B program in this for the loan proceeds to get to the maximum of the $10 million. And the reason that that is so important is because after this loan gets funded, you have an 8-week period to use the proceeds the way that they're allowed. You then go back to the bank and you provide them with all of the documentation to support that you used it the way that you said you were going to. And once you do that, they forgive the loan. You don't owe this money back. The SBA is paying the loan on your behalf, so the federal government is picking this up. This is intended to allow you to stay in business, and that's why this is the best thing since sliced bread. Next slide. So up to 100% of the loan for the costs incurred and the payments made in the 8-week period, payroll costs, independent contractors, rent, interest, utilities. They define utilities as electricity, gas, water, telephone, and internet. And if this loan is forgiven, or to the extent it's forgiven, it's actually not taxable income to your business. Likewise, while they haven't actually said, in general, if you have tax-exempt income, you don't get a deduction for the costs. So they're giving you the money to make those payments. You will not get the benefit of the expense, but you also didn't actually incur the expense. So that's kind of a wash on that end, but at least it's not taxable income. Next slide. So there's a couple of caveats in the loan forgiveness. And since the goal of this is to keep your employees on payroll at least 75% of what their pay was before the whole pandemic started. So there are some formulas that when you go back after you've gotten the loan and after you've made your payments for the 8-week period, there are a couple of formulas that you're going to have to prove. So you're going to be calculating the number of full-time equivalents, full-time employee equivalents that you had originally, right? Back in 2019, how many were there? Or if you formed late in the year, you may want to just use your January 2020 and February 2020 amounts. You're going to have your full-time equivalents in that base period. And then you're going to have your full-time equivalents after, in the covered period of the 8 weeks of the loan. And as long as you don't have a reduction, then the amount of the loan can be forgiven. Next slide. And the other area that's in here is they also want to make sure that you're not cutting any employee's pay that makes less than 100,000 by more than 25%. So they do realize that there may be temporary furlough involved with some people because you may not have had any choice while you're waiting for the funds to come in. So as long as you rehire people by June 30th and restore them to at least 75% of what their prior salaries were, then the people that you furloughed between February 15th and April 26th won't count against you in doing the computation of the full-time equivalents or in any computation for a decrease in the amount of salary. So that piece is a little complicated. There has not been guidance yet by the SBA on exactly how those mechanisms are going to be calculated. So what I'm explaining here is exactly what it says from the CARES Act. Again, the SBA, I'm sure, will be issuing guidance. Right now, the guidance that they've issued to date has focused on the getting the loans applications out and getting the loans into the bank's hands, but they haven't focused so much on this piece of it. But even as a worst case scenario, if you actually do have a reduction in your full-time equivalents, or you actually do have to cut salaries by more than the 25% and you don't get to restore them by the June 30th date, at least the interest rate is still only 0.5% per year, and the loan is still a 2-year loan, which gives you time to recover. So we do expect that if you're following all of the rules, you will get the full loan forgiveness. Again, waiting guidance on more of that information.
Terry, do you have any insight on, a lot of companies are going to do a 5 to 10% furlough or cutback or terminations. So in that case, the guidance is, I think, that you're going to get partial forgiveness. The majority will still be forgiven.
That's right. It's not an all or nothing. It's a proration. So if you cut 10% of your full-time equivalents and you don't restore them by the time you need to, then you could still have 90% of the loan forgiven, and then you would just owe back the other 10%. Correct.
And the other question that I'm getting a lot of is, if you get the 7B loan, which a lot of people already applied for, right, you get the 10K grant, that's fine. That doesn't factor in. However much money you get on the 7B, which we have no idea because the SBA has to calculate that and tell us how much they're willing to fund, how does that impact the forgivable loan, the 7A loan?
So you can qualify, you can put in applications and get funded in all of these different programs. That they are not mutually exclusive, which is the amazing thing. What you can't do is get the loans from all the different sources for the same 8-week payroll period and for the same amounts. So for example, if all of your employees were making less than the $10,000 annually, you can't get funded on the SBA 7B and also on this PPP loan for the same 8-week period. But you can get funded for week 9. You can get funded for all of the other uses that you have. So they are not mutually exclusive, and you absolutely want to put in applications for everything that you can possibly qualify for. One of the things that we do want to make sure that you are careful about is, if you already have other loans in place in your business, you may have loan covenants that are going to come into play where there may be rules that say that you can't get another loan. Well, this PPP 7A program, because it's forgivable, we think that the banks are going to not view this as a loan, especially for the 8-week period, when in week 9 you can go in and ask for forgiveness. So we think that that piece is going to not count as a problem for you, whereas the Florida Bridge loan and the 7B program are actual loans. So you are going to want to have a conversation with whoever is holding your current line of credit or other debt to make sure that you're not going to have a violation of the loan covenants that you already have in place. Okay, next. So if there are more questions that you want to have on the loan part, I know I went through all of that really quickly. And like I said, we're more than happy to share the Excel model that we created, and it walks through a lot of these rules. But if you have any other questions, great. You can keep typing away and letting us know, and we'll jump back over to those. But there's also been a lot of tax law change in the CARES Act. There were provisions in the Tax Cut and Jobs Act of 2017 when the economy was booming, and that lowered tax rates that were very beneficial for a lot of businesses. At the same time, there were provisions in that law that were detrimental to companies and individuals that were having not as wonderful success financially. And at the time, I had labeled those sort of kick them when you're down laws, and they were limiting your net operating losses that you could use to offset your taxes from prior years and future years. And there were some other provisions that if companies weren't doing quite as well, were going to be really problematic. And so the CARES Act changed those rules that were these Tax Cuts and Jobs Act, kick them when they're down rules. And now kind of we're all down a little bit. So they're loosening those up. So the first one involves net operating loss carrybacks. So net operating losses apply to C corporations and they apply to individuals. The individual, if you have a partnership or an S corporation, those entities don't actually have net operating losses, and I get that question all the time. They have losses, and the losses flow through to whomever the owner is, the individual or the corporation that owns the interest in the partnership or the S corporation. So the S corp and the partnership have losses, but not NOLs. They flow through probably ultimately to individuals. And then those losses are subject to a whole host of limitations, basis limitations, passive activity loss rules, and a few other ones. But those losses, if there are more losses than there is income, become a net operating loss at the individual level or at the C corp level. And those losses used to be allowed to be carried back. And then if you didn't use them up in the carryback, you could then carry them forward. Well, the rule changed with the Tax Cut and Jobs Act, and they said, nope, you can't carry them back anymore. And when you carry them forward, you can only offset 80% of your future taxable income in any year. So now for 2018 to 2020, you can again carry back net operating losses from 2018, 19, and 2020. You carry them back 5 years, and get money back from 5 years ago. If you don't get all of your money back, then you can go 4 years, 3 years, 2 years, 1 year. So you can cumulatively get back taxes that you previously paid, whether you're a C corp or you're an individual, based on net operating losses that you're having from your activities now. And there is not a taxable income limitation, meaning that if you would have been subject to the only offset 80% of your taxable income rule, no, you can offset 100%. And anything that's left after you do the carryback, if you have more losses than the taxes that you can recoup, then you can carry the rest forward. Okay. You would do this for the 2018 tax returns. If you've already filed 2019, you would need to amend your 2018 return, and then you have to file a separate carryback claim to go back the 5 years and for each of those years. And again, we can help you with any of those to make sure that they're being handled right and that you're maximizing all of the benefits that you can get. The next issue was that for certain companies and certain individuals and partnerships, there was a rule that limited the business interest expense. And that rule came into play in 2018, and it said that if you had interest expense that was in excess of your modified taxable income times 30%, you could only deduct up to the 30%. The extra interest expense that you paid, you were able to carry forward to offset in future years when you weren't subject to the limit. So they left that rule in place for 2018. But they are saying that for 2019 and 2020, instead of being limited to 30% of modified taxable income, you can deduct your interest expense up to 50% of modified taxable income. There was also, and this rule applies in general for companies that have more than $25 million of average annual gross receipts. But it also applied to certain other companies in very specific instances. So that requires making sure whether or not you were subject to it to begin with, and then whether by modifying it for 2019, that can create a loss that would then result in an NOL, which, as we just talked about, you can now carry back. There was also an election in this to opt out of these rules if you would otherwise be subject to them. And if you opted out of those rules, it meant that you were foregoing ever being able to use qualified improvement property as 15-year property, which wasn't a problem last year because it was 39-year property. Next slide. But the IRS and the CARES Act fixed what was a glitch when they wrote the Tax Cuts and Jobs Act, where they had taken what was qualified improvement property, which had been 15 years. They incorrectly made it 39 years, and then they couldn't all agree to fix it until this CARES Act. So now that qualified improvement property is back to being 15-year property instead of 39-year property, what that means is it's eligible for immediate expensing under the bonus depreciation rules, which will create losses, presumably, which you can carry back and make an NOL. So that's really beneficial. But if you made the election to forego the QIP as eligible for bonus, because it wasn't last year, but now it retroactively is again, where we think that we can put in applications with the IRS to request that they grant a revocation of the prior election that you made. We're still working to determine what that process is and whether there will be user fees involved, but depending on how much qualified improvement property you have, it may certainly be beneficial. And in general, qualified improvement property is non-structural interior portion of non-residential buildings that you improved after the building was placed in service by you. So what that means is if you have an existing facility, whether you own it or rent it, and you're doing improvements that you know, putting up partial walls, redoing carpeting, putting in you know, drop roof, a whole bunch of different stuff that falls into this category. It's now 15-year, it's now eligible for bonus depreciation, immediate expensing, and that this is retroactive back to 1/1/2018, which means you can, again, amend your 18 return, and then if it creates an NOL, carry that loss back and get prior dollars back. And I hear people typing, so are there any questions?
No, that was me typing. I sent
Okay.
out an addendum to what you were saying.
Okay, all right. I know I'm flying through anything, and you know, we can do questions again, either now or after. I'm always happy to answer questions. So the next thing is, in the act that they passed before the CARES Act, which seems like a lifetime ago, it was the Families First Coronavirus Response Act, and that was probably about a month ago at this point. It has provisions for paid sick and paid family leave. And those provisions began actually yesterday for wages paid or that would be earned for work that is not done because people, the whole point is paid sick leave, up to 80 hours if it's paid sick leave because you are unable to work either in the facility where you normally work or at home. And that is because of being under quarantine, because a health professional said that you personally couldn't work, and you're also not able to work at home. So depending on the nature of your work, then, you know, some people can work from home like me. This is my home office. I'm logged in on the computer, but a lot of people have jobs that they can't do that. So what this does is it provides that your employer is going to pay you up to 100% of your pay, up to $511 a day, starting yesterday and going forward for 80 hours if they meet these rules. And then if you're on up to another 10 weeks of paid leave, if you continue to be unable to work because you're caring for a child. So school's closed, you have children at home, you can't work your full day or you can't work at all from home, and you're caring for your child, not even that they're sick, but just they're home. And this is not at $511 per day. This is at 2/3 of your normal pay, up to $200 a day. Now, that provides cash to your employees, but what happens is that the employer is getting fully reimbursed for the amounts that they are paying by the IRS, and that is through a reduction in the payroll tax deposits that they need to make. So initially, the employer is keeping people who are not furloughed and who are working or not working from home. It's keeping their pay intact up to these amounts, but then the government is picking up this. Next slide, please. And the IRS actually just released today a form that will allow you to get the money back if you have paid in payroll taxes that you're trying to recoup from this. They released a form so you don't have to wait until you file your second quarter Form 941. You actually can get money back sooner than that on these payroll tax credits. Now, the employee retention credit was part of the CARES Act. And again, all of these programs are designed to keep people getting pay because the goal is to not have people on unemployment. And we all know, I think unemployment numbers might have been released earlier today. We all know that there's unfortunately millions of people who have already been laid off or furloughed. The goal is to get them back to work and to stop more. So the IRS has put these different programs in place, or the Congress has put these different programs in place so that companies can bring back workers, keep workers on payroll, do whatever is possible. You can't take advantage of all of these programs at the same time for the same payroll, not the loans, not the tax credits, all at once. But payroll, probably not going to be back to normal for it at the end of 8 weeks, unfortunately. And so you can make use of these programs at different time frames, or for people who, for whatever circumstance, maybe your business is more than 500 people, so you don't qualify for the PPP loan, or whatever your circumstance is. The Excel model that we built actually walks through all of the different circumstances. It walks through the employee retention credit. It walks through the payroll tax deferral, which we'll get to in a moment. And it walks through the various loans so that in the time periods that you're not covered by one, you may be covered by one of the other ones. So that's why it's so crucial to make sure that you understand the rules and make sure that you understand what pay will qualify in which periods of time. So the employee retention credit is eligible if the business is fully or partially suspended, or if there's been a reduction in gross revenue of over 50% from Q2 of 2019. And so this is a credit against your Q2 payroll taxes that you would be remitting. It's up to $10,000 per employee. And it's not just for their actual payroll, it includes the health benefits that you pay for them. This is designed for companies with fewer than 100 employees, and it's a credit whether the business is open or not. If you have fewer than 100 employees, if you have 100 or more employees, you only get credit for those employees not working due to the coronavirus related issues. Next slide. And then there's also a delay in the payroll tax payments. So the 6.2% employer portion of the Social Security taxes, you can actually elect to defer payment to the IRS for the taxes that would be due from 3/27 through the end of this year. You can pay 50% of them on December 31, 2021, and the other 50% on 12/31/2022. This cannot be combined with the PPP loan. So if you can get your loan, get the money from the SBA and get it forgiven, way better. But if for whatever circumstance you can't, or it's not, then you can make use of delaying the payroll taxes, or the portion of the payroll taxes that relate to the Social Security on the employer side. Any questions on this stuff? Okay, next slide. You can go back then. So that's all of the stuff that I had prepared, and I know I kind of flew through that. We're happy to share information. We have a lot of the information that we've been posting on our LinkedIn, on our Facebook, on Instagram, and on Twitter. So I'm sure all of you probably follow Michael. He likes and shares all of that stuff, so you're probably getting those blasts. We also have a newsletter that we're sending out, so if you give us your email, we'll get you on those. And we're happy to field questions for any of the members of the Boca Chamber, because obviously we're in the Boca community too, and we want to make sure that we're helping all the businesses there and all the individuals. I know that there's been also a lot of talk in the press about the $1,200 checks that are supposed to be going out. The latest information from that was that if there is direct deposit information on file for you as an individual, that the IRS will be direct depositing the funds into the account that they have on file from your prior income tax return. So if you have changed banks since you filed your 2018 tax return, I don't know how they're going to figure that out. And for people who don't already have direct deposit on file, they said that they were going to get a website page up and running so that you can actually record with them what bank you want your information to go to. So if you've changed banks or have changed bank account numbers, if you had ID theft and ever had to change your checking account or something like that in the last, I would say, year and a half, you're going to want to make sure that the IRS has the updated information for you so that you're not having a delay in receiving that payment if you qualify for it. And the IRS did say that they're going to use for Social Security recipients who may not have to file personal income tax returns because they may be earning too much. They announced yesterday that they're actually going to use the same mechanism of just automatically sending payments the way that they fund their Social Security so that they don't have to wait for tax returns to be filed for people that don't otherwise need to file them. So there's a lot going on right now in the tax world as well as the business world. And our role is to make sure that we stay on top of all those rules and then try and make sure that we get as much information out to the public, our clients, and our business partners in the community to make sure that everybody can make the best business decisions possible. And I know in general, some of the other things that we've talked about with our clients and we talked about even at the firm, at this time when there's so much uncertainty, as business owners, you should be looking at your cash flow, your projections for the year, to the extent that you can defer making capital improvements, that there are costs that you can cut, and that you can do other things to preserve cash. That makes a whole lot of sense right now because all of these programs are designed to try and not have companies go bankrupt, to make sure that they can stay in business, that they can keep employing workers. And the healthier, the quicker we can get back to being healthy and back to maybe business as usual, the better it's going to be for our community and for everybody. Any other questions?
Yeah, Terry, just to jump in, there were a few questions.
Mm-hmm.
Let's see, I'm looking at my screen. One of the individuals on the call has an SBA loan for a new business, and she indicated that there are deferred, there's like a 6-month deferral.
Correct. There are some existing SBA programs, and part of this is that they did announce, the SBA did announce that they were going to defer accepting or taking payments on some of those. I don't have the specifics, and I also have clients that had SBA loans to buy buildings and things like that for their businesses. We haven't gotten clarity yet on exactly how that deferral is going to work. So what I would say is, if you did it through a lender, contact your lender to make sure.
Yeah, contact the bank, exactly.
Yeah, contact the bank that was involved in that SBA program, because whatever programs are available, you're absolutely going to want to take advantage of. And
one other thing, and Firdaus, feel free to unmute your microphone if you have information about this. Firdaus is the controller of the Boca Raton Chamber of Commerce. And he said there is relief for 501c6 organizations. That's a member-owned organization, and that's the 7B, the EI, the disaster law, which I didn't know it covered C6. They talked about 501c3s and other types.
While I was on this webinar, Sarah actually just sent a message that there is some relief under the EIDL. Heard of anything to that?
I got the information off of the site. So, I mean, listen, don't quote me. It's all online, so you can't trust everything online.
Yeah, I researched it a little bit, Sarah, and initially they were talking about 501c3s and other types. They didn't say 501c6, but I wouldn't be surprised because it's been changing literally every hour, every day. So right. It's possible they added it.
And for anybody who's on the board of a nonprofit tax-exempt entity, absolutely these programs are available for them as well, because they have employees also, and they need to stay in business and keep providing the services that they do. So absolutely getting in touch with the nonprofits that you may be involved with to make sure that they're getting the same help in all of this is critical.
Yeah, we have 20 or so 501c3, like larger not-for-profit organizations, and we're helping them do the loan applications, and they're eligible for both loans. So take advantage of it. And it doesn't cost them anything because we can do all the work for them. And as an agent of the SBA, the bank actually pays our fees. And that goes for any company. If anybody needs help with a loan, it's basically free help. We can do the 7B loan, the 7A loan applications, give you all the guidance, and it doesn't cost anything from your end.
Right. Absolutely. And we've been doing that for, for a lot of our clients. And again, the PPP loan, which is the one that's forgivable, that the banks are accepting applications starting tomorrow. But I know, call them now, get the paperwork that'll need to be filled out so that you can get your application in tomorrow, over the weekend, early next week. There's a cap of, I think, $349 billion in this loan. But once that money is gone, it will take a Congress reappropriating more funds in order for there to be more money involved. So you don't want to wait a month and see how bad it gets and then put in the applications then, because by then there may not be relief. It may be tapped out. So really getting on top of this sooner rather than later is really crucial. And we highly encourage that, and we're here to help.
Yeah, practically what a lot of companies are doing, they are doing it, or they already have uploaded at SBA.gov the 7B application. You can get the $10,000 grant. Once you get approved for a loan and the government tells you how much you're approved for, you can decline the loan. You can simply take the money on the PPP. You can take both if you want to as well, but I think a lot of companies are thinking that they'll decline the loan that they have to pay back, take the grant money, then take the PPP money, of which the majority of that will be forgiven.
Right.
So can we apply for that $10,000 grant as a 501c6 that you covered, Terry? You covered that very early on in your talk. Can we just do that?
Yeah, for those, you go on SBA.gov. It's a simple loan application. You can do it in 15 minutes.
Okay.
And the guidance will be right there.
Thank you.
And that's based on a company's federal ID number. So, and they ask you very simple questions. What was the income in the prior year for the 12-month period? What were the total expenses for the prior year? I think there was a question, the number of employees. And then you're making some certifications that were pretty easy. You're not a criminal. You're, I think there were just a few questions. And so and it's important because that program, we think that there's a lot of companies that have subsidiaries, right? You may have single member LLCs that operate, maybe you have different rental properties and every rental property is in an LLC, or maybe you have multiple LLCs in your main business, and each one may have its own federal ID number and its own balance sheet and P&L and operations. We think that each one of those is eligible for the $10,000. We don't think that that's just at the parent level. The PPP loan, we believe, is at the payroll paying company level. And we believe that the 7B economic injury disaster loan is at the parent company level. So where you have multiple companies, these are not just for one company. You may have multiple entities that you own or are involved in, and they may all qualify for some of this relief or all of this relief. So, think through what activities you actually have. And it's not just operating businesses, it's also for rental enterprises. If you're not collecting rents, which is a very difficult situation, then you have no money coming in, but you still have to pay your insurance and your, mortgage payment and your real estate taxes and all of that kind of stuff.
There's a question right on the application that says loss of rents as well.
Right, exactly.
Last thing, Terry, I don't know if you can touch on, also, if you're a sole proprietor or you're an independent contractor, you're eligible for loans. I saw a question come through.
That's correct. So the same PPP loan that we were talking about for a few minutes ago under the 7A that you talked to your banker, you are eligible for that as a sole proprietor if you file a Schedule C independent contractor. So that application for you may not be available until April 10th. Whereas the ones for the businesses are available starting tomorrow. But again, you have a business bank account where you have a bank account where you have deposited your income from those activities of being a sole proprietor or independent contractor. So the first place to go is your bank. They're the ones that are administering that loan, and it's based on your net self-employment income. So the SBA has not released guidance beyond that, and I think that's the reason that there's a delay of the week in between the two programs, but you absolutely should look into it if that's your circumstance.
There are no other chat questions. Are there any other live questions? Otherwise, the idea today was to have a very targeted presentation, short and sweet, which Terry, great job.
Thank you.
This is her 10th time doing it, so she's getting pretty good.
But it's the first time I did the PowerPoint. Before I was just doing it off my notes and winging it. So actually did a PowerPoint now.
Great.
Well, awesome. Thank you guys so much for being here today and doing this for us. We greatly appreciate it. We thank all of you who joined us today. We appreciate you being here. It's good to see new faces and other faces. We look forward to seeing you at the next webinars that we have coming up. We have one coming up tomorrow at 10 a.m. That is the economic outlook in the midst of COVID-19. That is with Daniel Rupper. We have one coming up next week on April 6th at 2 p.m. It's content marketing strategies with Jen Jager of Plum Productions. And we have a lunch and learn going on April 8th at 11:45. Speaker Louis Fogel on effective communication. So bring your lunch, eat and watch. And we look forward to seeing you at the next Zoom meeting. Have a great day. Stay safe, stay healthy. Bye-bye.
Thank you, everyone.
Thank you.
Thanks.